Hello everyone, let me know if I'm audible and visible. Good evening everyone. Please let me know if I'm visible and audible. Okay, I hope I'm audible. So we'll start in next 1 or 2 minutes. So if you have any questions, please write that into the chat section. So like after a presentation, I will one by one like go through it and I'll try to answer all of them. So the agenda is basically I will cover up initial philosophy, what is the microcap club and what is my investment philosophy, and then it will be followed by the Q&A. So this session is about 30 to 40 minute maximum, and then like whatever questions you will be having, I will try to answer them. If you have any like trouble in accessing a video or audio, please let me know. So it will be better at the start of the session. So I have pinned a message at the like chat window. You can check on the website for the subscription details and other details. Okay, guys, I'll be starting the session. I hope it's already 6 o'clock, so I don't want it to delay it for the everyone's benefit. So thank you everyone for joining it on a Sunday and sparing your valuable time. And good evening everyone. So I'll be sharing my thought process about picking the micro caps, which generally is a kind of a risky investment as most of the investors perceive it. So I will share my thinking and understanding about it. So let me first introduce about myself. So I am Shashank Mahajan. I am into markets from last about 6 to 7 years, and like about 2 years back I have started the YouTube channel. I have uploaded probably more than 150 videos on various talks. If you get some time, please do check and visit our YouTube channel and my website. So I'm actively tracking various stocks starting from the chemical and pharmaceutical sector, created various videos, try to go as in depth as possible. And then apart from that, we are following various other sectors like building materials and some real estate sectors as well, and auto ancillary. So generally, the main agenda to create a value educator channel was to create or to give some value to the viewers, where there is some which are basically those are the stock which are not followed much by the audience or the broad audience. Generally, the people look for the investing mostly into the Nifty and top 50 or top 100 stocks, because they are well analyzed and well discovered, and information also we get very easily but but alpha generation from those stocks is quite difficult, uh, because they are like past multi-baggers, or they have already compounded their wealth, and those are the mature companies, right? So taking that thought process ahead, today I'll be explaining about the micro cap investing and how one should approach the micro cap investing. So micro caps are generally, in my understanding, are those businesses which are very early in their growth phase. So generally we'll be focusing on less than 1,000 crores of market cap opportunities, and I will tell you like how will be the construct of the portfolio, and what will be the stock selection criteria, and how we will try to mitigate the risk. Because if you are right into keeping your risk low, the return generally follow during the upcycle. But staying into a market during a down cycle, or during basically when there is a high pessimism and fears of recession, so staying in the market is very important. And if you are right with the business, generally you will survive the down cycle. So I also have seen multiple cycles, starting from like before 2015, before Modi ji came. uh, so that was a bad period. Then 2018 to 2020 again was a very bad period, specifically for the small and micro cap, mid cap. Generally nothing much has happened in Nifty. It didn't corrected much, but if you are an investor into small caps, it was a very bad phase. And again, like there is a another cycle which we are witnessing right now, where small mid cap generally corrected a lot. So market always generally moves into the pendulum. So it at one point of time goes into the extremely pessimism mode, where everything on a street is available at very very cheap valuation, and on other side it goes into the extreme optimism, where the stocks are like traded much beyond their intrinsic value, or if you put together all upcoming cash flows. So both are the opportunities are actually uh, both of these opportunities are actually opportunities for the well prepared investors who have already completed their homework. So you basically can take the opportunity where there is a pessimism to invest into those neglected and we can say undervalued stocks or businesses. And then very important thing is sitting tight when everyone is throwing probably stones at you, because that has happened with me many multiple times, that I will go with a particular stock which is most hated, while the business remains same, but due to some short term nature of a business, probably it trades much below its intrinsic value. So firstly we have to understand the difference between the quarterly profits or quarterly profitability versus profit generating capacity of a business. So these two are the completely different things. So if you check what has happened during the corona, so 1 or 2 quarters got affected because of the lockdowns and all, but that doesn't mean the profit generating capacity of the business got affected. And that's why sometimes market is very inefficient, that everything was a sale during that period of time, because it was a short term panic. And if you are well prepared, then you could have bought fantastic businesses during that time, because they were extremely cheap during that point of time. So let's come back to the micro cap investing. So if you diversify well your portfolio, and you have a ability to stay into a market for long period of time, when you know the story, when you the promoter, and when you are right on the valuations, because valuation is also extremely important thing. Even if you are right on a business, but if you buy that business at extreme overvaluation, even if the business is good, it is quite difficult to generate some alpha or some returns out of it. So these are the three criterias which I will be talking in this presentation. So another another good point of micro caps, which are generally less than 1000 crores market cap, is that they are under research. So if you check any broker's report or any institutional reports, so hardly anyone is following these stocks. These are not owned by any of the mutual funds. Hardly there is any HNI investors are into these stocks. So more or less like the promoters are there, and then remaining equities with the general public investors. So so due to this nature of micro caps, they are very much undiscovered, and at the same time they are available at very much under valuations also, because until and unless there is no discovery, it is it generally doesn't trade at the premium valuation. uh, I hope my audio and uh, everything is fine. Just let me know in a comment section so I can proceed ahead. Okay, thank you, Yuvraj. So, firstly, let me be very clear here. Here, like we are looking for those opportunities which are not followed broadly by the market, but provided that it is the quality of the business and quality of the management remains same, right? Illiquidity also sometimes can be a benefit for the small investors, because it is a challenge by the bigger mutual funds and bigger HNI investors, because they may not able to purchase that stock from the open market, right? So that can be a advantage for the well researched retail community. uh, Opportunity to invest in early cycles in a company that may be beginning of its growth cycle. So here we going to look for those opportunities where they are very early into their growth cycle, and I will explain later on why it may not be that risky if you have a good amount of diversification. Here I am not talking about investing into like probably three or five stocks or even 10 stock portfolio, because that might be highly risky if your picks doesn't go right. Okay, so as I mentioned, it will be basically the portfolio under 1000 crores of market capitalization, and where the key important is management, right? Because if the management is right, then only the business able to survive in a long period of time. The management has to be absolutely clear about the business, and there are various checks we generally perform to check if the management is right, or like they are giving the justice to the small minority shareholders, also, because that is the most important point. Again, we will be focusing more on our cash flows and not on the profitability, because as these companies are very small companies, it's a high chance that the profit and loss statements might not be prepared rightly. So, and plus there might be the chance of over, you can say, the receivables, where you can actually book the profits into the P&L statement, while the receivables can be high, working capital cycle might be very elongated. So it's important how much cash these companies are generating today, or what is the possibility of generation of the cash in tomorrow, because that aspect is also very important. Market generally gives the valuation based on the near term things. Generally market are like not that much efficient, probably for next 3 to 4 5 years horizon. So if you might have checked, like if there is a bad result for this quarter, stock generally tanks. It has happened with the many investors. Like for example, if you are tracking the Fairchem Organics, it's a chemical company into the oleochemicals and nutraceuticals. So stock was trading at about 21 2200 rupees, and there was one bad quarter of a quarter four, where the margins got strained because of their input cost has increased. The stock has gone from 2200 to probably like about 1200 rupees with the in a span of 2-3 months. And recently, if the recent result, if you have checked of a quarter one result, then they have posted a fantastic result, and the stock from 1200 rupees came back to about 1950, 1900 rupees. So sometimes markets are very inefficient, uh, and that gives us the room to invest during that period of time where we are very sure about the management and the promoters and the business quality. And very important thing is the structure of that industry. What is the structure of that industry? What I mean by that is how competitive that industry it is, because today's structure, I mean, or today's profitability is not very important. The most important thing while assessing any business is tomorrow's profitability, right? So until and unless there are no entry barriers into that industry, it is very difficult to assess tomorrow's profitability of the business, and market use the valuations according to tomorrow's profitability. Today's profitability is more or less generally factored in into the today's price. So that is also a key criteria which I will be focusing. So trying to like look for those businesses which can maintain their profitability in a long run, and able to sustain and grow from that side. So generally, this portfolio will be like the diversified portfolio of 25 to 30 stocks to keep basically the volatility a bit low, and there might be mistakes. I would be as transparent as you, because no one knows exactly what going to happen in next 5, 6, 10 years. So that's why it will be a basket approach. And even if we are right about 50% or 60%, so out of the 25 stocks, even we are right on 10, 12 stocks, I think there is a huge room for the wealth creation, because the base is very small, and opportunity size is very good. So that is the key understanding one should have. It's not like that no one is like 100% right into a market. Uh, uh, today we have like a very sad news about Mr. Chundulwala. If you check his own portfolio, his most of the wealth has created with the stocks which you can count on a fingertips, probably Lupin and Titan and two or three like stocks. So when we are right, we have to sit tight till that opportunity lasts. So that is the most key understanding one should have while creating a wealth or investing into a market. If you keep invested into the great businesses run by good managements, over the period of time you will definitely get a good wealth creation. So as Peter Lynn says, selling your winners and holding to loser is like cutting the flowers and watering the weeds. So generally the retail community follow this thing, like whenever the stock falls, they keep on averaging that losing stock, and whenever the if we get like 20, 30 or 50% of the profit, we generally book that profit. So if you follow this approach, it is very difficult to generate any wealth in a long term. So we have to see what are the reasons for that fall. Is that the business got affected, or this is just because of the perception of the market? So, and like differentiating between the perception and change into the fundamentals of the business is very important. So generally in this portfolio, I will be planning basically to keep holding on to the winners, and we won't much average on when there is a when we are probably going wrong with the business, right? So that is one of the philosophy. Let me come to the some case studies. Uh, like small doesn't mean always risky, or small doesn't mean like they are like having a very small or like very minuscule market share. So let me give you the example of Poshak. So it's a chemical stock, or chemical, they are into chemical business. And if you are not followed the value educator, please do follow us. We have posted many chemical stocks detailed understanding. It takes a lot of efforts to reach to that conclusion. So please do check our videos. It's about more than 1 hour videos in certain cases, where we have put together all the thesis whatever we could find. So it's a chemical company. They are into manufacturing of phosgene based derivatives and phosgene chemical. It's a gas. It's a highly toxical gas. So that's why it's not very easy to get the permissions from government. So that's why they have kept their niche, and it's a market leader. Even if that company is like about 2,500 3,000 crore market cap company. So it's the largest phosgene manufacturer, and currently they are increasing their capacity by 3 times. Uh, so that will see in their upcoming results on a profitability side. So if you are smart enough to identify it before the market, then all the upside is taken care. So that is the most important thing. Like, we will be finding out the niche chemistry, niche players into that particular micro segment, and then the valuation should be on our favor. So even if we go wrong, it should not affect the portfolio much. So let me take you through the basically 4 by 4 matrix of valuations and earning growth. So this portfolio is basically an outcome of the Phil Fisher and Benjamin Graham. So you probably know, like, who is the Benjamin Graham. He was a teacher of Warren Buffett. So he was always behind the valuation. So his thought process is that, like, you have to buy the business below its intrinsic value. So $100 or 100 rupee business, probably if you get it at say 10 rupees or 15 rupees, then he used to look for those opportunities, and whenever those businesses come back to their like intrinsic value, he used to sell it, and that was his philosophy. While Phil Fisher, if you check, he was more of a growth oriented investor. He used to look for the excellent businesses, provided that the growth is for very long period of time, or you may call it as like a secular growth opportunities. So I think, out of my all research whatever I have done till now, is that finally you get the maximum returns when you find out a business which is excellent business, which have a good runaway for future, and it has to be available at a good valuation. So I have gone through like multiple things, or like where I have lost my capital. Is first one is a value trap. So value trap is basically where you will optically see that the business is available at very cheap valuation, but then that business doesn't grow, and that cheap valuation remain cheap valuation forever, right? There are multiple examples for the value trap. So until and unless there is no growth, I am not interested into that business, because then re-rating never happens. The you buy it cheap, and you sell it cheaper by making a loss. So that is out of question. Second thing is, you go for the like extremely good business, but generally what happens is, if market comes to know about those good businesses, they are generally, what you can say, are well discovered, and that's why the valuations also becomes high. So just I was commenting a little bit on Tata Elxsi on my Twitter. So I have seen, like, most of the people are very bullish on that stock. I also will take that case study. We have bought it about 11 1200, and right now we are not no longer holding it, because that risk to reward is not in my favor. Yeah, like any another investor might have a different philosophy. So that is the expensive performer, where valuations are super rich and earnings growth is also coming. Now, where we lost another or where is another segment where we can lose the maximum capital is, you buy a business at very high valuation, and then that business doesn't perform according to your expectations or according to market expectations. So probably, for example, you buy a stock at say 50p, and till now it is growing at say 30 to 40% CAGR every year. and then due to the competition or the change in the sector structure or maybe any external event, that 30-40% growth drops to say 10-12% growth. So the business not going to get that premium of 50p. It will eventually come back or come down to the probably 15p or so. So if you buy a business at peak valuation when it was performing like the best till in its cycle or in its history, where it have probably have the very best margins and very best ROC, then I think it's a ticking time bomb. So if you go wrong in understanding of a business or due to external event, that profitability doesn't remain, then the valuation not going to like stay at those valuations. So generally what is my criteria is we will look for the low undervalued businesses which have the potential to grow in future. Today the earnings may not be very good, but there has to be some triggers that earnings will come with multiple what you can say different reasons or different probabilities, and when that earning starts coming, then market slowly takes that valuations and gives us a good re-rating. I will take some multiple case studies where we have invested in past and how the re-rating happened. So key understanding out of this 4 by 4 matrix is we have to avoid those businesses which are extremely good businesses but they trade at extremely high valuations. So peak profitability and peak margins with peak valuations is a bad combination. But if you check at the reverse side or opposite side, if the business have a moderate margins, moderate profitability, but if there are triggers, then these are the very good candidates. Even if you generally go wrong, there is a downside protection, which generally Benjamin Graham called it as a margin of safety. So margin of safety is also in valuation, but margin of safety is also more importantly into quality of a business. So we not going to compromise on a quality of a business, but at the same time we are not going to compromise on a valuations also. It's very difficult to create a long term wealth by buying extremely overvalued stocks. And then market perception versus investor perception, as I was telling you earlier, that sometimes market becomes pessimistic and sometimes it becomes optimistic. So both of these scenarios are basically opportunities for the well prepared investors. So you can buy into that pessimism when everything is for the sale, and again you should sell or market gives you the opportunity to sell when there is a optimism in the market. Right, so I will start with some case studies. I Please let me know in a comment section if you are all following it. So I will go ahead with it. Okay, Yuvraj, thank you for your comment. I will start with the case studies. I will be sharing this PPT also with you. You can check on my site. The link is pinned for the in the chat section. You can check this PPT. It is visible. Uh, okay. So thank you for Abhishek. Like I hope it is all well. You all can see and hear me well. Okay, so let's come back to the Tata Elxsi case study. So, if any one of you are like a long-term investor into Tata Elxsi, so definitely there is a very good discussion which is happening on various social media, and everyone seems to be bullish on this stock because they are posting a very good earnings growth. I mean, you may differ from my understanding, but that is fine. Like market is full of different understanding and different philosophies. So if you check, let me take you back to the 2018, 17, 18 when the Tata Legacy had a good dependency on the JLR side, Jaguar and Land Rover from the Tata Motors, and then that time the JLR was going into the bad patch, and I remember this stock has fallen from probably 1300 rupees to about 700 800 rupees, um because of the nature of the JLR business, right? And after that, if you check the management has diversified into the other streams like the medical equipments and the media side, and then they created it as a platform of various services they started offering, and that stock started getting re-rated eventually. So we have to basically buy a great business when it is not performing basically great, because if you buy a great business at great valuations, it is very difficult to get something out of it. Probably you will do well, you will get the returns as you get in an FT, but to get that extra alpha, I think it might be very difficult. You can check the long term chart of Wipro, the high which created by the Wipro in 2019, when the business was doing extremely well. That high is broken back after probably 20 years in 2019. So we have to differentiate between the great business and the great investment. Always, great business may not be the great investment, as Warren Buffett says. So it's a paramutual betting, you might check about it. So we have to check what are the odds of winning and what valuations I'm giving for that business, right? Because most of the things are uncertain in future. So if you will pay the full valuation, and if there is no margin of safety, which probably I think in Tata Elxsi right now at what valuation it is trading, so it becomes very very difficult to hold on into it, and then it is quite difficult to allocate it significantly in the portfolio. So which basically, when you are against the herd mentality, that when the business is for a short period of time not performing well, when the valuations are comfortable and the management is good, then probably it is the best time to go into those businesses and wait, because Tata Legacy has probably not done anything from 2018, 17, 18 till 2020, just during the pandemic, and after that that rally has started. So we bought it about at 1200 rupees, and I'm just not talking in a year. You can check, I have uploaded a video on a YouTube disclosing that we are buying it, and then probably we had stayed invested till about 7000 rupees, when we thought the risk to reward is not that favorable, and we are out of it. The stock might have performed after that, but we have to check what are the other opportunities and what is the risk to reward at that period of time, right? So another example is Deepak Nitrite. Again, if you check the Deepak Nitrite, if you go back into the time when they were putting up their phenol capacity, most of the market participants were not very much happy, because the balance sheet was very over leveraged. Question was where they will sell the phenol, and management has done extremely good execution, and then the stock got re-rated. At the same time, earnings also followed it. So earnings growth and stock re-rating are the two important things which we are looking, provided that the management has the actual execution capabilities, right? And Deepak Nitrite till now I am holding, and the reason for that is right now the balance sheet is not over leveraged. They hardly have any debt. They are doing extremely well into the phenol side. They are upcoming with the phenol derivatives, and the beauty of the Deepak Nitrite, I think, right now is that they have already created a very very strong entry barrier, which I was trying to explain you earlier. So whoever have the phenol, they only generally can go into the downstream derivatives, because it will be very cheap for the manufacturer if they have the backward integration. So what going to happen, according to my understanding in future, is that Deepak Nitrite will get a good market share for the downstream derivatives also for the phenol, and already they have got a super market share for the phenol as well. Recently, if you check quarter one con call, they have said they are planning to increase the capacity by about 25% in future. So I think like phenol and all downstream derivatives, Deepak Nitrite have a very good what can I say size of opportunity. Most of these products are import substitute products, and management is very, I think they able to execute really well, which they have already proven with their initial 1500 crores capex of phenol, which they were planning during 2015 2017, and I think the execution seems to be very good, and I think like the size of opportunity is very huge, and Deepak is doing all right things to tap into that size of opportunity, right? So we have to wait for the re-rating, and we have to our entry price should be good so that like we get full benefit of that re-rating. Next is basically the IEX, Indian Energy Exchange. So this video also I posted it during probably 1 or 2 years before, when actually we were buying it. But the problem with the YouTube is like I mean when investor actually has to take a call or should invest, it is I mean they are not very much interested because it was not discovered much. So probably when I was buying this stock, there was no mutual fund, and the first mutual fund I think entered was a Parak mutual fund, like about 210 rupees. I'm talking these prices before the bonus, right? So if you come back to the investment philosophy, so again the structure of the market, structure of for the power exchange was extremely good. It was a duopoly, PXIL and IEX, where IEX have a like most of the market share, about 90 to 95%, and that management had that innovative capabilities. They were keep on coming up with the innovative products and able to keep that market share. So our initial thought process while investing into IEX is that it will generally double its earning in next 3 years, which generally we look for all the investment which we generally do. So, but we never thought that such a huge re-rating will come in such a short period of time, right? We were expecting that the IEX will more or less remain at that price to earning of about 25 to 30, probably 40 times, because it was a platform business, one of a kind of a business where there is hardly any competition. And then that's the growth slowly started. I'm talking about the basically profitability growth. So profitability actually doubled from 2019 or 2020 level, but the major advantage what we got is that re-rating of the price earning multiple. So that 25 multiple has gone beyond 100 at one point of time, when the stock, like when that news, you might be aware that they have disclosed about the bonus share, 1:3 bonus share. So I thought it's a great opportunity to get out of it, because this 100 we not going to sustain, because IEX is not going to grow at 100% every year. So PEG, price to earning growth, is also very important criteria which one should check. And then we got out of it probably at about 250 to 250 to 70 rupees after bonus, and probably before bonus from 750 rupees to 820 rupees. So again, like we got a good returns out of it. And then like after that the stock has fallen by 50%. We have not taken good amount of re-entry till now, because the power volumes also gone down due to coal shortage and all. So I think that this is what I was talking about. Like you have to look for both the opportunities. When the market is giving extremely undervaluation or pessimism, stocks are available at a reasonable valuation, and at the same time market becomes optimistic, and that gives you the good exit point also, right? Same has happened actually with IDFC First Bank. When I was exiting that stock I had clearly disclosed that on the YouTube also. But the irony is that, like, when you try to, like, give good inputs to the community, it becomes very very difficult. So I got a lot of stones and probably hatred during that time when I was exiting during 60 rupees, and right now the stock is at 45 rupees after about 1.5 years. So I still have a good chance to enter back into it. I have saved that opportunity cost, plus it is much below my entry price. So I have a choice that if probably I can enter back into the IDFC, or I may enter back to some other business. Same has happened with the CDSL. So CDSL also, if you check the market structure, was extremely favorable. It's a duopoly, and CDSL was basically taking a market share away from the NSDL. So it was a clear basically investment opportunity at that price. So so we bought. This price is actually wrong, it's not a 48 rupees. So we bought it about 250 rupees. uh, and like recently we have sold it about 4 months back, 4 5 months back, at about 1450 to 1500 price range. It has fallen a bit after that, and we are probably waiting for the re-entry if we get it at a good decent valuation. If we don't get, it is okay, we're not going to chase the momentum. There are many multiple opportunities which are available at say 12, 13, 15 p, which have the potential of growth probably more than 20 to 25, 30 times. So this is generally our investment philosophy: buying it at a good valuation, and then wait for that multiple to get re-rated, and market gives you the good opportunity to exit also. And at the same time, the core focus has to be for the profitability growth, and profitability growth occurs only if the industry structure remains good. If there are 10 different competitors which will enter into the business, then that profitability may not remain, right? So earning growth plus PE re-rating is basically a Lollapalooza effect, which Charlie Munger talks about. So we have to wait for the both the things. Um, as an individual or as an investor, we don't have any control on a PE rating. So that is the market event, or that market going to decide how much PE the stock should get. But if we have the enough market margin of safety, if we have a clarity on the business scaling, or like what is a competitive structure into that business, then we might be right on a earnings growth. And when earnings growth comes, generally PE also gets re-rated. So that is the key understanding which I have learned over the period of my investment journey. So we have to bet on initially earnings growth. If there is no growth, generally market don't give any PE re-rating. Actually, it gives the de-rating. So that is the value destruction, right? So what is this basically? So here it's not very clearly, it is not an advisory system. Here I will be creating basically a platform for the like-minded investors who all can contribute according to their domain and their background, because micro caps are basically very very under researched stocks, right? So where you need to have a good connects with the management, good connect with the employees, have to have a very good understanding what's happening on the ground, right? So it is a community basically for the investors, where everyone can actively participate into a community to make it better and better for everyone's benefit, right? Here I am not going to recommend anything like buy this and buy that. I will be showing what I am doing out of my research, right? So this is a very clear thing. It's your basically decision that you have to follow us or you don't have to follow us. We'll generally put this is our research, this is our thesis, this all hard work we have done, and this is what we are doing for our own portfolio. Then you can take your call that what you wanted to do. It is not mandatory or at all. So here, like I will be creating, or I'll be planning a lot of meets of members, where we can physically meet, we can connect on a Zoom calls to understand like what if you have any ideas, you will be given a platform to present those ideas, and collectively everyone should grow, because scuttlebutt is also very very important while investing into micro caps, because the information is not directly available, which is the case with the large and mid caps. So there are no conference calls. If you check for the micro cap stocks, hardly there is any conference call which is conducted by less than 1,000 crore market cap companies. Annual reports also, if you check, there is no information at all which is given into the annual reports. One or two pages hardly are there under the MD&A section, and nothing is much given. So it takes a lot of hard work, lot of scuttlebutt, and understanding the sector, understanding nature of a promoter, checking, going back and checking the history, how they have performed, what is the nature of this business, can they sustain this profitability. So it's a extremely difficult and extremely, what you can say, painstaking journey, but actually it is worth, because the returns are exponential returns. So even if you are right for, like, say, 40-50% of the time, all our mistakes will be taken care by the stocks which going to perform. So the members will get all the other resources which we have created over the period of time. Apart from YouTube, already in YouTube I have created more than 100-150 videos. I have created multiple other videos also on various companies which I have not shared with the YouTube community. So that all videos also you will get the access. All upcoming webinars which I will be planning, that access you will get. You will get access to connect with us one-to-one basis. Plus, we'll be arranging the conferences also, and so it's a close community of the like-minded people who are interested into investing into micro caps and small cap opportunities, and who have the stomach to go through that volatility. And let me be very clear, it is not the advisory, it is just a community where everyone should come together, and then we'll be creating a model portfolio. This is what we are doing, and then it is your choice what you have to do with your own investments and own basically wealth or funds. But we'll take a lot of inputs from your all, like and it will be a continuous improvement from our whatever is our understanding. So it's basically like community to grow everyone together. So this is the pricing, and let me be very clear, it will be a closed group. I don't want it to make it a mass market product, because liquidity also is going to be challenging to this micro cap. So we are offering generally 5 different services, or 5 different time horizon services, starting with 1, 2, 3 and 5 years, and lifetime memberships are also we are giving. We got already a fantastic response. We just launched it yesterday, and getting a very very good response. So if you are interested into, like, learning something, or planning to basically share your understanding on a various micro caps which you are tracking, we are all available here, and we would like to learn from you also. I will be sharing my understanding for the various micro caps which I am tracking currently. I have shared few of them on my Twitter. So I was tracking a company called as Diamines and Chemicals. So it's about a 300 to 350 crores market cap company. They are into a specific chemicals called as piperazine and EDA, that is ethyl diamines. So I have done some of the scuttlebutt on that side. What is going on into a business? What kind of competition they have? What kind of margins they going to create? So for that, lot of reading is required, because there is no disclosures which are upfrontly given. So if you can check the hierarchy, what has happened in last 6-7 months, you will get a fair idea of, like, where they have been in last 10 years, and where the management is planning to take this business ahead. So they recently got the EC approval, that is environmental clearance approval, for increasing their capacity by 10 times. Balance sheet is very very good. They don't have any debt. Out of like 300, 350, 400 crores market cap, they have about 40 crores of cash with them, and about 12 crores they have invested in various chemical stocks. So that is as good as cash. So recently they bought the land in the hedge about at from NCLT. It's I think 12 acre land. They have the existing land at the Baroda side. They have done the JV with KLG Organics recently again, upcoming good company in that area. So we have to keep checking what is happening actually behind the business, because when I was buying that stock, the numbers weren't there. Like they were posting a normalized profitability about 3, 4, 5 crores every quarter, and suddenly that profitability has jumped to about 11 crores, and stock has got re-rated about 50% in last 3, 4 weeks. But it was not a fluke, to be very honest. I was tracking the chemical prices from various sources. So ethyl diamonds prices, if you check, they actually has rallied a lot during that period of time. So I think the actual story is yet to unfold when they will complete their capex and they have the multiple lands also. So after that the story will basically come into the picture. But we have to be early when probably very less people are tracking it. Then only we get the valuation comfort. So but basically I bought it at about 15p, and I'm waiting for the re-rating and the actual capex to get executed. So I have kept some margin of safety while purchasing that stock. Now only thing is I have to sit tight and I have to stay invested for a long period of time and keep checking and keep re-evaluating that if they able to execute what they have promised. So this is about the pricing details. And if you need any help, this is my contact number. You can directly connect me personally for any queries. You can check and send your queries on the given email also. We'll try to respond to all the queries, and then I will keep the chat window open for next about 15-20 minutes. It is about already 7 o'clock. I have taken a lot of time of you on this Sunday. So if you have any specific questions related to the product and how we going to any more clarifications related to Microcap Club, please feel free and type your questions. I will answer most of the questions, whatever I can. So I hope I have done the justice in this about hour, so that like can understand little bit on our philosophy, what we are into, and check the YouTube background. It's not like everything is in here. We have done all our hard work and created various videos, and trying to dig as deeper as we can. Uh, so if you have any questions, please let me know. I'm open for the Q&A. So I will take the first question by Rajesh. So he is saying 30 stocks are too long, too high, too big, especially when compared to mutual funds and small case any reason. So see Rajesh, the point to keep it bit diversified while starting is that like our mistake should be minimum, right? But when those stocks will start performing, then we'll slowly start cutting down our losers, and will basically keep on increasing our allocation where the portfolio going to perform. So at the start it might look bit higher side. I personally believe in very high concentrated portfolios because that what actually creates the wealth in a long period of time. But here the situation is bit different where we are going to like invest into the micro caps. So over the period of time, from that 30 stocks, I will reduce probably to 25 and then 20. But it is a smooth transition. On the day one, I don't want to start from the very small bucket or very extremely concentrated portfolio. Uh, See, Dinesh, what returns we can expect. So I think I cannot commit for the returns, and as I was saying, it's not a advisory. But here we are going to focus extremely what you can say, like all our focus will be on the business side, right? Returns are always the outcome of a process. If you have a right process, you will get the right returns. If you have a wrong process, then for that momentum you can earn a lot, which has happened during after a pandemic, and then it is very difficult to maintain that return. But definitely, here all that hard work and efforts are to generate a good amount of alpha compared to Nifty. But I don't want to commit any returns. But definitely, at least on earnings side, I am looking for those companies who can generate the earnings more than 25% for a long period of time. So that is the initial screening criteria. I hope I answered your question. Uh, Uh, Again, I will take a question from Rajesh. Thanks for your question, Rajesh. What is the capital you suggest to start with? So we don't have any commitments. We don't have any restrictions from our side that you have to start from the X capital on a lower end as well as on a higher end. So it's a completely your decision. Minimum capital you will require to just buy a single share of that complete portfolio. So we don't have any restrictions on that side as well. It's a completely your decision. I will just check some more questions. So Sanket, thank you for already joining us and taking a lifetime membership. I appreciate your confidence and trust with us, and we'll try to give whatever best we can. So you're asking like, are there any good number of better stocks under 1,000 crores market cap, or limit will be need to be increased under 2,000 crores to get better filter stocks? I think Sanket, there are good amount of stocks. We go not going to like make a portfolio on a day one, right? It is a process. It will be done over the period of time, as and when we'll look those opportunities, because opportunities might be available, but a very important thing is the valuations. Can we get them at the desired valuations or no, right? So that is the endeavor which I have to study multiple stocks. Probably I'm following more than 100 stocks right now, so that like we keep on getting more and more opportunities. I am not invested into all those stocks, but it gives the good horizon, and like so that our mistakes eventually reduce, because you also need to know what is going into the various sectors. So for example, I'm invested into, say, Navin Fluorine or Deepak Nitrite, or say Neogen Chemicals, or a Poshak. But I will also study all the other chemical stocks just to understand what is happening into a chemical sector. Is there any other competitor which is entering into it? Like for example, Diamines, which I shared, it's a micro cap. So similar capacities are also developed by the Balaji Amines for the ethyl diamine. So I have to always be on my toes and keep on checking, is the competitor going to enter into my domain, or the business which I have invested, and going to disrupt it or not. So that's why we'll try to cover as much stocks as we can, just for the understanding sake, but the portfolio will be limited to, say, 20 to 30 stocks. And as and when, like, if there is a need to increase the number of if there is a need to increase bit beyond 1,000 crores, then we are open for that. It is not very strict criteria, but general thinking is that we have to go for the undervalued, undiscovered stocks which are at that inflection point for the growth. I hope I have answered your question, Sanket. Dinesh is asking what percentage of portfolio one should go for the micro cap. Generally, start with a smaller amount, say about 15 to 20% maximum, and then as and when you will build a confidence, then slowly you can move over here. Don't start with the 100% of the capital for the micro caps, because because they will be very volatile, and you should have the stomach to hold on to those during the bad patch. Pankaj, can you introduce your team? Yeah, yeah, I will. I will. I will. Like we all come together and have a set up a good team, so uh, we can plan some session with the team. Yeah, Sri is asking multiple time expansion. Yes, that is the focus. Uh, so we are planning to invest in those companies at early stage of their growth cycle. So returns can be exponential, but there is no commitment, right? So let me be very clear. So guys, I will be keeping the window open for 5 more minutes. If you have any questions, please write into the chat section. And if you have anything, like, you can also write on a mail. Mail, I will just type my mail over here so that you can just check it out. And I am available on Twitter also, so you can check on Twitter as well. You can directly message me. So I am open for all the queries what you have. Lingaras, thank you very much to subscribe to Model Portfolio, and please suggest us wherever we can improve. And thank you very much for your kind words. We are all here for the improvement, whatever we can, and try to give the best service for you all. And let me be very clear, there will be some mistakes. I wanted to be as transparent as we can, but our all our aim is to keep on reducing those mistakes over the period of time. Because on a day one, like, I also don't have any clue what's exactly going to happen in next 5 years. Even the management doesn't know. So that's why this, like, bit diversified approach we are going to take. Pankaj, please write the mail to us, or like, I'll just keep the contact page open so that, like, you can check it out and, like, contact me at any time. The same number is available on WhatsApp also, so you can directly reach me. So that, like, on an individual basis, whatever best we can offer you, I will try to offer you. So Jitendra, we have about 15 guys. And let me be very clear, we don't have any salesperson. We are not focusing on our marketing. We are all core into the equity research because that is our passion, right? So all like almost 99% of my team is out of research. So I will close the session in next 1 or 2 minutes. uh, Parag, thank you very much. There is no need to pay us. You can contact me on my given number. EMI available right now. It is not available. We might think. Please write to me on a mail, or please be free to contact me on the given number. I'll try to do whatever best I can for you. Okay, guys. Any more queries? Please feel free to reach us, and we'll see whatever best we can. I am expecting we should all stay connected in our Value Educator Club and try to learn from each other, because I would also like to learn from you all guys. Till now, it was a one-way communication on a YouTube where I was posting according to my understanding. I would like to learn from you, from your domain, and let's create the well together, and let's grow together. So thank you very much for your time of about an hour. I have taken a bit more, and have a great weekend. It was a long weekend. Thank you for your time, and have a great evening, and happy Independence Day to you all. Stay connected, and stay well. Okay, let me close the session. I will make this session as it was recorded. I will upload to the YouTube, so whoever has missed anything, you all can watch again. Thanks.